I've got to tell you, the chart I'm now about to share with you is my favorite chart. My favorite of this entire semester.
Professor Reich is going to show us a plot of what people actually pay in the United States after taxes to argue that the tax system in the United States is not progressive. I'll explain why he's wrong.
Get ready.
I'm ready.
What is it that people actually pay after all of the deductions and tax credits and all of the special loopholes? Now, this is the total tax rate, federal, state, and local. And what we're going to do here, this is the income group. Here's lower income down here, here's higher income, and here's the top 400, the richest 400 people. And we're going to look at, here is their tax rate, federal, state, and local, starting at 10%, going up to 70%. Here we go. Here we go. Isn't that the most amazing thing you've ever seen?
Professor Reich's source is a New York Times article. Their source is a book by Sayez and Zuckman called The Triumph of Injustice. And in that book, the authors share this plot. And what it shows you is that individual federal income taxes are progressive, meaning the rich pay a higher rate of taxes than the poor. But payroll taxes are regressive, meaning the poor pay a higher rate than the rich. Payroll taxes are mostly Social Security taxes, that's OASDI, and how it works is up to the first $184,000 you make, you have to pay a flat rate of 12.4%, half from you, half from your employer. Meaning if you make $10,000 a year, you have to pay 12.4%. If you make $180,000 a year, you have to pay 12.4%. But if you make $1 million a year or $100 million a year, you only have to pay 12.4% on the first $184,000 you make. So the percentage of your total income that goes to the payroll tax just falls away to basically nothing. This is a table showing us the OASDI tax rate over time. Robert Reich's graph starts in 1950, where the Social Security or the payroll tax is around 3%. And then it goes up over time, 4, 5, whatever, you know what going up means, up to 1990, where we reach the 12.4% that it is today. So when Robert Reich's graph is wiggling from 1950 to 2018, seemingly showing taxes becoming less progressive, that's just the payroll tax rate increasing. Well, still, payroll taxes are regressive, right? No, I don't think so. It introduces a concept that I think Professor Reich forgot about, which is you get stuff back from paying taxes. So this is from the Congressional Budget Office. They write 2 factors contribute to the progressivity of Social Security benefits. First, the benefit formula replaces a larger share of earnings for people with lower lifetime earnings. And second, people with lower lifetime earnings are more likely than average to receive disability benefits. So you pay payroll taxes while you work, and then you get Social Security when you stop working, or you get disability benefits when you become disabled. The Social Security program is progressive, that is, the ratio of benefits received to payroll taxes paid over a lifetime tends to be higher for people with lower earnings than for people with higher earnings. So this is the lowest quintile, the people who have the bottom 20% of earnings, they get 2.5 times what they paid on average. So they receive 2.5 times more than they paid in benefits. And that falls off to 1.5 for the middle quintile and about 1 for the richest quintile. And yes, the Congressional Budget Office is accounting for inflation here. But when we look back at Robert Reich's graph and see, oh, the richest are paying the same rate that the poor pay? Oh no, we have to remember benefits. You get stuff back when you pay your taxes, like you get SNAP and Medicaid and transfers like that. At the beginning, Robert Reich is saying we have to get rid of deductions and loopholes and tax credits in the analysis, and we have to include payroll and state and local taxes. Well, okay, can we include transfers too? An analysis by the Tax Foundation does this, and what they find is that the U.S. system of taxes and transfers is highly progressive. You take taxes and transfers into account, money that the government is taking from you because of your high income or giving to you because of your low income. For every dollar borne in taxes, the average household in the bottom 20% received $6.17 in gross income transfers. Basically, the top two income quintiles were responsible for income redistributed to the bottom three quintiles, especially the bottom income quintile, when we're taking into account state and local taxes, federal taxes, total taxes, and transfers. So federal income taxes themselves, they're progressive, higher rates for higher income earners. And those taxes mainly fund programs like SNAP and Medicaid and help with the mortgage and child care assistance and so on that go to low income families. Payroll taxes, they're regressive at collection, but they basically fund a progressive system of benefits. Corporate taxes, they're progressive. Consumption taxes, this is like sales taxes at your state and local level, those are regressive at collection time, but that's an issue you should take up with your state and city government. And net altogether, if you include transfers, the system is highly progressive. I think a progressive tax system is good. We should take most of the money from the rich. They have the most money. And we should give most of the money to the poor. They need the most money. I just think we shouldn't be deluding ourselves into saying, oh, we have a flat tax in the United States. Well, not if you count what government does with the money. Then we have a very progressive tax system, tax and transfer system in the United States, as I hope I've explained here. Thanks for your time.